Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Elaine Kub analyzes corn and soybean markets ahead of the February crop report. Kate Brooks discusses the USDA's cattle inventory report. Roger Wilson looks at 2014 Nebraska crop budgets, and we'll show you how Argentina and Brazil have become two of the world's top 3 soybean producing countries. As expected, the Senate Tuesday approved the Farm Bill and sent the legislation to the President for his signature. He was expected to do so Friday. The new 5-year Farm Bill will save $23 billion over 10 years. For more information on what the crop insurance program will look like, you can watch our interview with Brad Lubin from last week's episode. That conversation can be found under the Previous Programs tab on our website. Elaine Kub is our marketing analyst this week. On Monday, the USDA will release its latest supply and demand estimates. Possibly in anticipation, corn and especially soybeans have put together strong performances this week, at least as of Thursday morning. We talked with Elaine Friday morning about the South American soybean harvest, the trade range for corn, and the February crop report. Soybeans have had an extremely strong week unless they close negative today, right. But what's the reason, do you think?
Well, and this is coming out of the blue. For a long time, these markets have been very, very neutral, very sideways. Coming up now, it's sort of interesting to see this confirm, this idea that we're going to have normal seasonal markets and have some sort of a rally into the spring. That's true for both corn and beans, and probably led by the new crop, just because that's, you know, when these crops are going to face the most risk. We've also got a report coming up on Monday. Perhaps we're seeing some speculative interest based on that. This idea that the old crop supply and demand here in the United States is still a very tight situation. So a lot of these things are happening and nothing has happened to counteract that. For instance, the Chinese buyers are on their New Year's holiday, so you wonder that this might be susceptible to some sort of correction very suddenly if they come back from their holiday and cancel some sales. Well,
and with what we've seen in beans so far, what's the argument for maybe holding and trying to get a little bit more price?
I cannot come up with any arguments to really hold. If you're still holding old crop beans, you're either very near that $13 cash level or perhaps even at it or above it. So this would be a price if you are still holding on to old crop beans and probably looking at some cash needs going forward. This would be an excellent opportunity to get rid of that risk because, you know, that market is very susceptible to correction, particularly as the South American crop starts being harvested.
When does that South American crop start to weigh on the market?
Well, it's already getting started, but there are certain areas that are still filling up the pods and somewhat vulnerable to weather still, so you might still see some weather activity, and that might have been part of the reason for the rally this past week too, but if it was, I think that's an overdone argument. So through the next couple of months, we're going to continue to see harvest reports, confirmation of large yields probably, and then, you know, into that April-May timeframe, now you're looking at the crush of the infrastructure that they have there to ship it out of their country.
We've also seen corn with some activity, which is unusual for corn. It's back above $4 on a cash basis. Or on the cash market, what would you think that it might go to here?
You know, for the new crop market, I think my goal would be $4.75, and you're really only about 15 cents away from that. For the old crop market, it's hanging around that $4.40 level, so the cash price you might get $4.30, somewhere between $4.20 and $4.30. And again, if you're looking at a situation of you haven't sold very much, you've got a lot of risk on the books, and you're going to need some cash coming forward, I think this is a reasonable time to sell because I don't have a very optimistic look for it to go much higher. You know, I don't think we're going to be in one of those years where we're going to have another streak up to $7 or $6 or probably not even see $5. So I think you have to have very modest goals, and this may be pretty close to where you want to be selling.
How would you characterize the demand market for corn between exports, ethanol, and livestock?
I think it has some chances for a little more bullish tweaks coming into the supply and demand report. It has some chances for some bullish anticipation in the baseline projections that USDA will come out later this month looking at new crop acreage. So there are some chances for that supply and demand situation to be tweaked, but I don't think that we're looking at any major changes.
We're probably at the point in time where the private firms are trying to stiffen up their acres for 2014. Yeah. Do you have an impression of what we might see here in case some farmers are trying to gamble back and forth?
Well, I get the sense that the calls for lots of higher bean acres are probably overdone. You see some estimates that there are going to be 6% more bean acres in 2014. And some of that was based on some reports from seed salesmen in November did book more soybean sales, particularly in the western corn belt. But I think in the heart of the corn belt, it's still going to be the status quo where you just plant as much corn as you possibly can because they have a different yield ratio to work with out there. So I don't really anticipate seeing a lot of extra bean acres, and that means that you are in a situation where beans will have to pay more, or they could rebuild that price ratio and get a more exciting price.
Short-term outlook for basis in corn and soybeans?
It's been very quiet throughout the year. I think seasonally we would expect it to get a little bit stronger going into the spring. Monday,
the USDA releases its reports for supply and demand. Should we expect any kinds of surprises with those numbers?
I don't think any major surprises, but I guess that's why they call them surprises, right? But I don't think, I mean, like I said, there could be some tweaks, some increase in the corn exports, some bullish tweaks to the soybeans just because the domestic crush has continued to be quite strong and the export pace has been quite strong. But I don't think any major surprises.
And finally, you look towards that 2014 crop that will go in the ground in a few months here. How much of that crop, either corn or beans, do you think is already contracted, is already sold?
I mean, close to zero, I would imagine. I mean, you look at your projections for making money, these prices that the market is offering are not profitable. Mike Duffy at Iowa State has kind of put out the benchmark profitability levels at $4.29 for corn after beans, $11.13 for soybeans after corn, $4.97 for corn after corn, so if you have a very high input cost situation. So that means your cost of production is already basically matching the prices that anybody's going to pay you at harvest. So you're really not in a very great situation at this point in time.
Again, the USDA's latest estimates are scheduled for release Monday morning at 11 o'clock. Next week, Roy Smith will give us his thoughts on corn and soybean markets. Now to our coverage of soybean production in South America and the first of our three-part series detailing the sectors in Argentina and Brazil. For context, in Argentina, we traversed 850 miles through farm country, and in Brazil, our trip took us to Sao Paulo, then into Brazil's largest soybean growing state of Mato Grosso. That state will produce nearly 30% of Brazil's beans this year. With a good finish to the growing season and favorable weather during harvest, Brazil could very well overtake the United States as the world's #1 soybean producer. Regardless, the crop there will set a record for production, and the same could happen across the border in Argentina. The USDA is expecting Argentina's farmers will produce 54.5 million metric tons of soybeans this year, and Brazil's total will be 89 million metric tons. The U.S. harvested a little more than 89.5 million metric tons during the 2013 season. The new highs in both Argentina and Brazil shouldn't be a surprise once you see how far and how fast the two countries have climbed in soybean production over the last 2 decades. In Argentina's countryside, northwest of Buenos Aires, there are areas where you can see for miles. And at times, nearly everything making up the picture is soybeans. There is some corn here, a little alfalfa, a few other crops are used in rotations. But at the end of this growing season, Argentine farmers will have planted soybeans at a 6-to-1 ratio compared to corn. Santiago del Solar de Rego farms more than 30,000 acres across Argentina and says the move to more bean acres began about 20 years ago.
Well, I think the big change came during the 90s. During the 90s, we started with no-till technology. Around here, we had pastures before with feeding cattle with alfalfa pastures. And in just 3 or 4 years, we shift our, let's say, the way we produce in Argentina, and no more grazing cattle around here.
The production in Argentina this year will be nearly 5 times larger than it was in 1990. Alejandro Salemi is growing almost 6,000 acres of soybeans on his operation and says there are 2 reasons the country shifted its focus to soybeans. The first was no-till farming paired with Roundup-ready technology. The other is an issue that still impacts how producers here do business.
The second reason is because of government regulations. They banned the wheat and the corn exports, so it makes the producers to take decisions about producing more soybeans than the other 2 crops.
Argentina now controls its corn and wheat exports. In addition to setting export quotas for crops like wheat and corn, it also imposes an export tax. The rates for those 2 commodities are less than the huge bite its government takes out of whole beans. Argentina taxes soybean exports at 35%. While Argentina and the U.S. have increased their soybean production at a measured pace since 2000, with occasional dips in output, the chart for Brazil is much more graphic. It starts with production at 39.5 million metric tons in the 2000-2001 season, grows steadily until 2008, then explodes and nearly equals the U.S. in each of the last 2 periods. Luciano Shozo Shiratsushi of Brazil's research corporation Embrapa says farmers in the Mato Grosso area have been able to utilize better techniques and genetics.
Yeah, what is going on the last 5 years, the technologies, the research and technology came strong in this region, and I mean they are using a lot of technology, and the yield is increasing a lot in the last years.
But in addition to gains in technology, Brazilian farmers are also utilizing more land. The country's harvested area has tripled since 1990 and doubled since 2000. The city of Sorriso lies in the center of Mato Grosso. For many farms in this area, the ground sits not far from the Amazon rainforest and still features many trees. Brazil's government requires it. Evil Zirbadin says when he first bought land here, the law required him to maintain at least half of it as a conservation area. Now it's 80%.
When we started this, under the previous law, we had 50% of our property for reserve and the other 50% with crops. But now that the law changed, we are now required to have 80% of our property for reserve. What we're going to do is keep the initial split between reserve and crop in our first property, but now we are buying more land so that we can add more reserve to our total property so that we can reach that 80% goal for the current law.
Evil Zir thinks if he doesn't match the 80% requirement, eventually he won't be able to sell the crops off his land. Although forest accounts for 61% of land in Brazil, it may not actually be a limiting factor in increasing crop area. Amaryllis Romano of the economic consulting firm Tendencia says she believes the total hectares will dramatically rise if another large production is altered.
Well, I think we can easily double the amount of land used in crops, because we have all the cattle in Brazil. And if we just manage to decrease a bit all the area occupied by one cow, we can double the area.
After India, Brazil has more cows than any country on earth. But less than 5% of those animals are held in feedlots. The rest are held in pastures and meadows, which make up nearly 3/4 of Brazil's agricultural land. Decreasing area per cow could open up more cropland, but that production would put more stress on an already shaky and expensive system of roads and rail. In Argentina, the growth is expected to be much more tempered. Juan Ignacio Alonso estimates the size of the country's crop for Bunge and believes there is still room for growth above the current 54 to 55 million metric ton level.
You can grow because you have still hectares to deforestate in the northern part of the country. And well, also you have the intensification of the production systems. So well, that's are the 2 ways that the production can still grow here. And we expect that in coming years the production will reach 60 or more or less that level.
While the production potential may be there, Santiago del Solar Dorrego says with the current export tax, if a farmer can't yield more than 30 bushels per acre, there might not be enough incentive to farm the land.
Well, sure, we can increase crop yields with technologies, and that's for sure. And also we can increase area. In the north of our country, we have a very big potential. And the south and west from Argentina, some dry regions that have some potential to produce with lower yields today, but they can increase tomorrow. But the price is not enough today. If you get the right price, the production will come.
Back in the United States, private estimates are expecting U.S. farmers will put more soybeans in the ground this spring by scaling back corn acres. Based on the trends and our conversations in South America, that's one commonality among the world's top 3 soybean-producing countries. Next week, we'll move on to part 2 of our series and show you the growing conditions farmers face during a normal year in both Brazil and Argentina. That'll include a look at disease and insect pressures, storage conditions, and the costs of production. The USDA says U.S. producers are holding the lowest number of cattle and calves since 1951. The latest cattle inventory report, released the last day of January, shows cattle and calves as of January 1st, 2014 totaled 87.7 million head. That number is down 2% from a year ago. The inventory for cows and heifers that had calved was the lowest since 1941, and the 2013 calf crop was the smallest since 1949. UNL Extension livestock economist Kate Brooks joined us Thursday to discuss what the numbers mean for the cattle industry.
You know, there really wasn't a lot of surprises, expected declines, further declines due to 2013. All cattle and calves were down about 1.8% in the U.S. to about 87.7 million head. So there wasn't a lot of unexpectations there.
Right, we knew that the numbers were probably going to be lower, just a matter of how much.
Yeah, exactly.
Is there a sign here that producers are wanting to or going to expand?
We are. If we go back to 2013, if we look at cow slaughter numbers towards the end of 2013, we saw a very large decline over 2012 and our previous 5-year average. So we saw a decline in cow slaughter numbers. We saw less heifers going to the feed yards in the end. And then if we look at heifer retention, we saw a 2% increase in heifer retention for January 1, 2014 numbers over the previous year. Nebraska alone was up 10%.
So these are the numbers that we live with for another year, just like last year, since there's no middle report. What does it look like for the rest of the year, 2014, a cow-calf producer maybe versus a feedlot producer?
The thought is on the cow-calf side, we're looking at possibly that point of herd stabilization expansion here through 2014. We've got strong calf prices going forward. They're very high right now. We'll probably come back some for part of the year as supply and demand switches through the year, but we're still looking at strong calf prices throughout the year. So lots of potential for the cow-calf producer here in 2014. On the feedlot side, we do have declining prices, but they're paying higher prices for those input calves. We do right now have strength in the fed cattle market, but again, we've started to see some weakening there as box beef prices have come down. Now, in the futures, cattle futures, we've seen the declinings more in the February, April contracts, but we haven't quite seen the declines matching the wholesale prices here with cash-fed cattle.
Our full interview with Kate can be found on our website and through our mobile app. The USDA announced in late 2013 it wouldn't release a cattle inventory report in July of this year due to budget cuts. The Department of Ag Economics here at UNL has released its 2014 crop budgets for Nebraska. There are 66 different budgets. Under a certain situation, the estimated cost to produce a bushel of no-till corn with irrigation dropped 6 cents this year to $3.98 per bushel. Soybeans under the same conditions increased 75 cents per bushel to $10.07. No-till wheat in a fallow system fell 61 cents to $5.25 a bushel. We talked with Roger Wilson about the numbers and input costs earlier this week and started by asking about how the continuing increase in land prices affected the budgets.
We use the survey that the University of Nebraska does on land to get the land prices, and of course they have been going up quite a bit for a few years. But they are going up a lot faster in the eastern part of the state than in western Nebraska. So the impact of land on budgets are more in the east than they are in the west.
Nitrogen and glyphosate, how do those two inputs affect what you expect to see as a final price?
Well, nitrogen and glyphosate are major inputs in particular corn. Corn uses a lot of nitrogen. And glyphosate, if you're using no-till technology, and most of the budgets I talk about in the news release are no-till budgets, and so they use a lot of glyphosate. And the fact that nitrogen prices appear to be going lower and glyphosate appears to be going lower has really helped those crops like corn that use a lot of glyphosate and nitrogen.
So corn is decreasing this year in cost of production.
According to my calculations, the cost of production for corn has gone down a few cents. It's pretty stable, but it has gone down a few cents. And since not as much nitrogen is used in soybean production, the effect of the soybean production has gone up, and the effect on wheat production is we use the no-till there, so it has also gone down.
The cost of corn $3.98, soybeans at $10.07, and wheat at $5.25. And we were talking before, corn puts a pressure here with the current price that you could probably get on a cash basis at the elevator, while soybeans leave you a little upside yet if you sell at the right price.
Well, that's the way it appears right now. Certainly the cost of production compared to the price is a lot closer for corn than it's been for a few years.
Any surprises in here that you saw, whether it be in those input prices or any major differences from last year?
You know, we should talk about a couple of changes to these budgets that we've incorporated. The first one, we're using a lower price for corn seed. In the past, we've always used the list price, and most farmers are getting a discount by buying early, and so we've basically incorporated that discount in there. So that's been a little change that in the way we've calculated, maybe not so much in what the farmers are experiencing. The other thing we've done differently is because of the relative prices of the different formulations of nitrogen, we are on our pivot irrigation budgets are showing that the nitrogen is being applied via the pivot rather than using anhydrous, and so that's a change. And you know, when the relative prices of the products change, you can sometimes make changes in the operation that really make use of those.
All 66 Nebraska crop budgets, including sugar beets, dry beans, and alfalfa, can be found on the Crop Watch website. We'll also link to that information on the Market Journal homepage. Our full interview with Roger, also on our site, includes a short discussion on how the team formulated its 2014 crop budgets. Now here's UNL Extension State Climatologist Al Dutcher with his weekly weather forecast.
Well, folks, here again for the weekly forecast, and of course the big news this last week was the snowstorm that occurred earlier in the week. Pretty much followed exactly how the models indicated in terms of the storm track. But with the colder air pushing farther into western Nebraska, the moisture that was lifted over top of that cold air was able to generate snowfall all the way up into northern Nebraska. So with that cold air, it didn't take much moisture to generate a few inches of snow, but the area south of Interstate 80 was the big winners in terms of snowfall. Common 4 to 6 inch totals were reported, the heaviest totals right along the Kansas border, and then most of that from south central to southeast Nebraska. As you got down into Kansas, of course, we've seen totals approaching the 1 foot mark in central Kansas, and we had the high winds, of course, drifting it with that light snow. It moved around a lot, so wheat fields, as I was down giving a talk in Beloit, were pretty much bare because all the snow was blown off. There was nothing to hold it there. Now, we do see some temperature rebound over this next week, and in the long term, it does look like a warming trend will finally materialize as we get past the Valentine's Day period. And whether or not that lasts for a long time, we'll wait to see, but it does look like at least we may break this bitter Arctic air for a temporary reprieve as we get into the second half of the month. So let's take a look at the main models and see what we can expect as we go through this next 7-day period. And the first thing I'll draw your attention to is we still have a northwesterly flow. Not as cold of air as we've seen earlier this week, but we do have a system that's moving through the Dakotas and Iowa today. Might generate some accumulating snowfalls across northeast Nebraska. We're probably looking at 1 to 2 inches at the max, and a little bit of snow in the southwest and the panhandle Panhandle as some of the moisture that's coming into California rides over the Rockies and generates a little bit of light snowfall. More importantly, we're seeing a significant surge of moisture into the western Rockies, and we are looking at 2 to 5 foot totals of snowfall in California, so this is good news for them in regards to their drought, but it's going to take successfully more in the way of storm systems to basically undo the damage of the last couple of years. Now, as we go into tomorrow, we're going to start to see that trough lifting out, so we still see a little bit of a reprieve in temperatures. Still chances of flurries across the northwestern Panhandle and possibly into northeastern Nebraska, but overall we're not expecting any significant accumulations. Now, as we go into Monday, we'll start to see some of that warmer air trying to build in, so a gradual warm up. Again, the best chances for snowfall may be across the Panhandle and across northeast, but even here it just looks like a few flurries at the most. Now, as we go into Tuesday, we'll really start to see the warm air bubbling in, and we may see temperatures making it up into the 40s, easily into the southwest, and it should be a fairly nice day. On Wednesday, should be some of the warmest temperatures of the week as we look at temperatures possibly approaching 50 in the southwest, 40s in southern Nebraska, and we'll be looking at mid-30s in northern Nebraska. But you'll see that trough starts to dig in, so we have an increased chance of snow, particularly the western half of the state as we get to Thursday, and we may have to pay attention. There may be some significant accumulations, and as we get into Friday, all of that energy passes to our east, and we start to see that ridge building in, indicating warmer air into our region. So if we look at the main temperature forecast, we are looking at very cold temperatures across the northeast, a warming trend as we go through the middle of the week, and then another cold shot as we get into next Friday. And in terms of the 8 to 14 day forecast, shifts the cold air out to our east, that's from next Thursday through the following Tuesday, warm air to our west, and in terms of precipitation, most of it stays to our north.
Thanks, Al. Today's interviews are available on the Market Journal website and through our mobile app as part of the February 7th episode. Those include our discussions with Elaine Kub, Kate Brooks, and Roger Wilson, as well as our feature on the increase in soybean production in Brazil and Argentina. Next week, Roy Smith will be our grain marketing analyst. Tina Barrett will evaluate farm income levels in 2013 and 2014, and we'll show you the growing challenges farmers face in Argentina and Brazil. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.